Is this a bubble like the dot-com boom in the late 1990s or the housing bubble leading up to the 2008 crash? Or is this like tulip mania back in the 1930s in the Netherlands? A lot of people consider that the first major financial bubble, where investors drove up the price of tulip bulbs so much that the price of just one tulip bulb was more than some houses. Then the price collapsed and a lot of investors went bankrupt. Is that what's happening with Bitcoin now? The CEO of JP Morgan has been quoted as saying Bitcoin is worse than tulip bulbs. And a Nobel Prize winning economist went even farther, saying Bitcoin is evil. Even Warren Buffett, a legend in the investment world, said stay away from it. It's a mirage, basically. On the other hand, could it be that Bitcoin is the future, ushering us into a glorious new world? A revolutionary invention, the most important since the internet, that's going to remake governments, economies, and societies. I mean, geez, you hear stories of teenagers becoming millionaires and more publicly traded companies like PayPal and Tesla announcing that they're putting some of their assets into Bitcoin or going to start accepting Bitcoin as payment. And while the price of Bitcoin has been super volatile, overall, no other conventional financial asset has come close to its explosive rate of growth. And that's probably why Bitcoin is such a controversial topic and probably the most common topic that I get asked to weigh in on from my financial coaching clients and from the people attending my live events. So in this video, I am going to break down what I see as the biggest pros and cons when it comes to Bitcoin and give my honest and unbiased views about Bitcoin as a currency and as an investment. And just to be super clear, nothing I say in this video should be taken as investment advice. This is purely for educational and entertainment purposes only, okay? And if you're new to this channel, I'm Penelope Jane Smith. I've been teaching for over 20 years, and I am super passionate about providing people with the financial education they never got at home or in school so that they can have ease, peace, and freedom around money, and ultimately become financially free, where the income from your investments pays for your lifestyle, so you're totally at choice about what you do with your precious time and energy. If you find this video interesting and valuable, please take your finger and gently tap the like button. That would really help me out, and I appreciate it. Thank you. Now let's dive in. Bitcoin started in 2008 when a mysterious someone, or could have been a group of someones, called Satoshi Nakamoto, published a white paper introducing this digital currency that would let people exchange money electronically without going through a third-party financial institution as a middleman. Instead, a shared public log of all transactions is stored on a network of computers all around the world. This is called a blockchain. How this works is this. You don't want to have people spending money they don't actually have. So someone has to verify each transaction before it gets added to that shared public log, right? Anyone in the Bitcoin community can verify transactions through a process called mining, and the Bitcoin software rewards them for their work with Bitcoins that the software creates out of thin air. This is where Bitcoins come from, boys and girls, in case you didn't know. For the sake of efficiency, transactions are grouped together in blocks, and then those blocks link up like a chain. Blockchain. Get it? A lot of the algorithms that Bitcoin uses are a type of cryptography, which is the practice and study of keeping information safe by encoding or encrypting it. Since this is a currency created with cryptography, it's called cryptocurrency, in case you were curious. All right, so the first Bitcoin exchange, which was a website that let you convert Bitcoins to dollars and dollars to Bitcoins, was launched in March 2010. And just a couple months later, a guy in Florida offered 10,000 Bitcoins to anyone who would send him a pizza. Someone sent him 2 large pizzas from Papa John's, and this was a historic moment because it was the first time anyone had used Bitcoin to buy an actual thing. Those 10,000 Bitcoins were worth about $41 at the time and are now worth around $500 million as I'm recording this video. I'm pretty sure that's the most expensive pizza ever. But it kicked off the positive feedback loop that got those first few early adopters to believe in Bitcoin. And the main thing that gives Bitcoin its value is people's belief that it's worth something. I mean, think about it. How are these digital tokens that some anonymous person invented out of thin air worth anything? And how come these particular tokens are worth something while hundreds of other crypto tokens have failed? Because people believe they are. And that's not that different than a lot of other traditional currencies. For example, the United States Treasury has nothing in its vault backing your money. Since Nixon took our currency off the gold standard in 1971, there's been no gold or any other collateral that you can convert your coins and banknotes into. The US dollar is a fiat currency. What does that mean? The definition of a fiat currency is a currency whose usefulness results not from any intrinsic value or guarantee that it can be converted into gold or any other currency, but only from a government's order, fiat, that it must be accepted as a means of payment. Basically, fiat means faith. Our currency is held up by the faith that we all have in it being worth something. Basically, we're playing with monopoly money. The risk of going off the gold standard is that some people are concerned that we could experience hyperinflation. In Germany, in January 1919, in order to buy 1 ounce of gold, you needed 170 German marks. By November 23rd, 1923, not even 6 years later, to buy 1 ounce of gold, you needed 87 trillion. 87,000,000,000,000,000 German marks. If you had a wheelbarrow full of cash, someone might steal the wheelbarrow and leave the cash. And this isn't just something that happened one time 100 years ago. Something similar happened in Venezuela in 2019. That's why some people invest in Bitcoin as a hedge against inflation, because Bitcoin is designed to maintain its value by limiting the number of Bitcoins in existence. The Bitcoin software pays miners less and less over time, cutting the reward in half every 4 years, so that by the year 2140, the reward will hit zero, and at that point, 21 million Bitcoins will have been mined and no more will be created. But the Bitcoin supply will effectively hit that plateau by the mid-2030s, when 99% of all Bitcoins will have been mined. And actually, the supply will go down, because one of the downsides to Bitcoin is that if you lose your private key, which is what gives you access to your Bitcoins, there's no way to recover that money. There's no third-party institution like a bank where you can ask to reset your password. Only the person who creates a wallet, which is where you keep your Bitcoins, has access to the key, which is great for privacy and freedom from regulation. But if you lose it, as they say in The Good Place, you are totally forked. Last I checked, an estimated 30% of all Bitcoins have been lost so far. And I read a story recently of one programmer in San Francisco who couldn't access his wallet containing over 220 million in Bitcoin. In addition to possibly losing your private key, some other potential downsides are the potential for price manipulation, fraud, theft, and other scams. Plus, I do expect to see more and more government regulation come into play over time. But the biggest problem I see is price volatility. Bitcoin can go up really, really fast, but it can go down really, really fast too. This roller coaster ride can feel really intense, so you have to be honest with yourself about how that's going to impact you emotionally. Because the price swings so much, this means that Bitcoin isn't effective for doing the job it was originally intended for, which is to facilitate small transactions between individual people. So even though it's called a cryptocurrency, it acts more like an investment vehicle, like a stock. So I wouldn't put a bunch of money that you can't afford to lose into Bitcoin. On the other hand, I see some big upsides too. It's getting easier and more convenient to invest in Bitcoin all the time. In the mid-2010s, you had to run clunky software on your computer or find a Bitcoin exchange, cross your fingers, and hope it was legit. Now, there are all kinds of websites and apps you can use, and more traditional financial institutions are working on making it possible to trade Bitcoin. If you don't want to worry about having a wallet that you have to keep track of, there are more and more ways to invest in Bitcoin indirectly. Think about investing in gold. You can buy actual gold coins or bars and have to figure out where to put them. Or you can go online and buy shares of a fund that invests in gold. And now you can buy or sell shares of that fund in a matter of seconds without having to worry about storing and keeping track of actual gold. Now, you can do the same thing with Bitcoin and invest in a fund that turns around and invests in Bitcoin for you. And you can do that right inside your regular account, like your Roth IRA or your brokerage account. Another creative way to invest indirectly is to buy stock in companies that are going up because they're investing in cryptocurrency or now accepting cryptocurrency, like PayPal, Square, or MicroStrategies, which has done virtually nothing for like 25 years and is now on fire because they bought a lot of crypto. The second upside is that Bitcoin could potentially be a hedge against a weakening currency. Here's a chart of the US dollar showing that it started falling in March of 2020. A lot of time when the dollar is weakening, people buy gold. And as you can see, the price of gold did start going up. But then from August of 2020, the price of gold started going down too. Where did all the gold buyers go? I wonder if they became Bitcoin buyers instead, which has contributed to Bitcoin going up. The biggest upside I see is that Bitcoin is getting more and more mainstream adoption, with more companies accepting Bitcoin as a form of payment and or holding some of their assets in Bitcoin. You also have China working on its own digital currency because it wants to be a reserve currency, which makes people take cryptocurrency more seriously overall. This contributes to that positive feedback loop of Bitcoin gaining in value because more and more people agree that it has value. And the more it grows, the more stable it becomes. If we look at a price chart of Bitcoin, it's really significant that the price of Bitcoin broke above the $13,000 range. Look how it just could not seem to get above around $13,000. It tried in 2018, it tried in 2019, and again in 2020 a couple of times before it finally broke above at the end of October, beginning of November. And then it broke above its previous lifetime high of around $20,000. New lifetime highs are a sign of strength. So as long as Bitcoin stays above 20,000, I think it looks pretty strong. Bottom line, I don't see the original vision for Bitcoin becoming a reality in terms of using it as a digital currency for everyday transactions, but I do think that blockchain technology and digital currency are here to stay for the foreseeable future. Despite some of the downsides, especially the price volatility and highly speculative nature of Bitcoin as an investment, I think it makes sense to keep a small percentage of my portfolio, maybe like 1 to 5% in Bitcoin, maybe even split that between Bitcoin and Ethereum. We didn't even get into Ethereum. If you want me to do a video about that or any other cryptocurrencies, let me know in the comments. I wouldn't put in any money that I'm not willing to lose. But I think that having some money in Bitcoin as a hedge against the US dollar going down and for the growth potential is fine. So those are my honest thoughts about Bitcoin. I feel a little nervous posting this video because this can be such a controversial and polarizing topic. So feel free to disagree with me. All I ask is you be kind about it, okay? And if you feel like I'm missing something important, please let me know. If you found this video helpful and interesting, please make sure to tap the like button because that helps me grow my channel. Thanks for doing that, I really appreciate it. And if you'd like to see more videos from me around personal finance, money management, saving, investing, financial freedom, make sure to subscribe to this channel and click that little bell icon so you'll see when I make a new video. And finally, if you want to connect with me on social media, I'll post the links in the description to my various accounts. Right now, I'm mostly on Facebook, Penelope Jane Smith, and on Clubhouse at Penelope Jane, and I'd love to see you there. Thanks for watching and happy investing.